Ladies and gentlemen, welcome back to the channel. Here in today's video, we're going to go over everything you need to know about AMC Stock. We do have some breaking news today that you need to know. AMC Stock is up 1.35% today. We did get some pretty big economic data that came out this morning, and yeah, it bodes well for interest rate sensitive names and not so well for big tech names. So big tech is selling off today, and while the rest of the markets are doing pretty well. We'll discuss that and exactly why that is. We'll also talk about SMCI, in which the stock is up almost 10% today. I do want to warn you guys because yeah, that is definitely a bubble. It's definitely a short squeeze. It's probably not about to end well. And I think the days are limited for SMCI from here. So I'm going to give you my perspective on that as well, just as a freebie, because why not? I like to help you guys if I can. If I can help someone avoid taking a massive loss, well, that is something that I will do. I'll also share with you a little bit of the news today that is causing SMCI to be up 10%. And let's just be honest. Let's start there, because holy moly, SMCI. This is a bubble. This is a short squeeze. Whatever word you want to use, I think accurately represents what's going on with SMCI. Take a look at this. I've never seen this before. Not even GME. You've never seen this before. To have an RSI of 96.5. Huh? Well, like, what? That's insane. Right? That is literally a short squeeze on preposterous scales, just because of the sheer amount of time that, you know, this has been taking, right? It's kind of insane, off the rails. Now, we did get some news today. SMCI was upgraded, and that definitely goes well for the stock. Who upgraded it, though? Bank of America with a new buy. And SMCI doesn't have a ton of analysts that cover it. So when a new one does or raise a price target, it really does stand out. Now, BofA Securities analyst Ruplu Bachira, who initiated coverage of the server maker stock with a buy rating and a $1,040 price objective. He said Supermicro's potential may not be fully appreciated by investors. Are you kidding me? Are you kidding me? This is classical chasing. Classical chasing. If everyone starts to talk about a stock, if a stock starts to go from $20 to $900, you gotta start raising price targets. You gotta start covering the stock and raising price targets even more, because I mean, when does a stock ever go down? I mean, it isn't that just crazy, right? A stock falling, psh, that is ridiculous. And I don't know why this keeps freaking popping up on the screen. How annoying. Stupid. But yeah, this is a dangerous one. In my personal opinion, this thing is going to come crashing down and burning, probably upon NVIDIA's earnings. I think NVIDIA is also going to fall. NVIDIA is down about 1% today, which is kind of different. NVIDIA down, SMCI up. When you get to NVIDIA earnings next Wednesday, that's when I expect this thing's going to crash and burn. Maybe it happens before. That's a possibility. But really around NVIDIA earnings, that's, you know, going to be the catalyst, because I think the law of large numbers is really hurting NVIDIA at this current moment. It's going to be very hard to keep growing at the pace in which they have been growing at, and NVIDIA has to keep growing at that pace really to justify how much the stock has moved up. So I think either way, NVIDIA is going to fall after earnings. I think that means the semiconductor space can fall after earnings. Now, that actually bodes well for the broader markets, for especially the lower quadrants of our markets, like in AMC, right? Because all of the capital, all of the money in our markets has been flowing into these AI chip names that, I mean, if you start to actually see those stocks sell off, well, that is going to be very good news for AMC, for other names like a Tesla that have not done well recently, because we're not seeing inflows into our markets. What you're seeing is just money going from this area to that area to that area and back to that area, right? So the money has been sucked out of the lower quadrants of our markets and put into these AI names. Once the money starts to leave the AI names, it goes back into the broader markets. And that's why big tech is down today, but other stocks outperforming. And really the broader markets are outperforming in general. And if you take a look at what the indexes are doing today, you can see the Russell 2000 is up 1.33%. The S&P is up 0.14%, and the NASDAQ is down 0.22%. That's why, again, I will make the argument that even if we do see, let's say, NVIDIA fall after earnings, you don't have to see the markets come down, right? Apple is down 1.38% today. NVIDIA is down 1%. Microsoft is down about 1%. Google McDougal is down about 3%. I mean, what big tech name is actually green today? Literally none of them. Amazon's even down 1.5%. I mean, so yeah, big tech can sell off and the rest of the markets can rally in its place. And you do not have to see stocks crash just because big tech is selling off. Just like you don't need to see the broad markets crash or the indexes crash. And I'm really talking about the indexes here. You don't have to see the indexes crash, even if 98% of stocks are selling off, as we have seen recently, but your big tech names are rallying. So it's actually very, very interesting. Now, this is really the news that is prompting the big sell-off in big tech and the broadening out of our markets today. Retail sales tumbled 0.8% in January, much more than expected. Advanced retail sales declined 0.8% for January, down from a 0.4% gain in December and worse than the estimate for a 0.3% drop. So last month's number was 0.6%. It might still be pulled up here on the economic calendar. Yeah, so this was, because I haven't refreshed this yet today. Last month's number was 0.6%. They revised that down to 0.4%. The estimate for this month's number was the big number we were watching for today was negative 0.1%. I'm going to have to uninstall this. This is ridiculous. Why the heck is that popping up over and over and over again? I've never seen that before. And what happened? You came in at negative 0.8. So now let's go ahead and refresh this and take a look at the data. And boom. See? Now it was revised down to 0.4%. The estimate was still the same of negative 0.1%, but you came in at negative 0.8%. So it's even worse because if you're looking at a month-over-month number, this is a month-over-month number. If now you're negative 0.8 compared to a positive 0.4 last month, you are net negative over the past 2 months for retail sales. Now, what does this do? This will lower GDP estimates. And it does not appear that the estimate is actually out just yet. It might be by the next video, so stay tuned to the channel for that one. It says the next estimate comes out today, so they're probably formulating their different opinions. But retail sales falling like this definitely is going to hurt the GDP estimates. Now, initial jobless claims came in a little bit light. Again, 212,000. New York Empire State Manufacturing, that's a better number, negative 2.4. Last month was negative 43.7. Almost like a typo. Is kind of crazy. It's kind of crazy when that number came out. Philadelphia Fed Manufacturing came in at positive 5.2. Retail sales excluding autos month over month. This is a number a lot of people paid attention to. This came in at negative 0.6. Export prices year over year came in at negative 2.4%. Still good news there. Import prices negative 1.3%. Philly Fed business conditions came in better than expected at 7.2. New orders came in at negative 5.2, so still bad there. Prices paid, that's a little bit worse, came in at 16.6. Retail sales year over year came in at positive 0.6%. Big miss there as well. Industrial production month over month. These numbers were revised down quite a bit. So this was another big miss here that came out at 9:15 this morning. You came in at negative 0.1%. Last month's number was revised down. As you can see here, the R revised to 0%. So yeah, not fantastic for the economy. Industrial production year over year came in at 0%, revised down to 1.2% last month. Let's see. That's so annoying, dude. Business inventories came in at 0.4%. Last month was negative 0.1%. And the housing market index came in at 48. Estimate was 44. Capacity utilization also fell to some of its lowest levels that you have seen since 2021. This fell from 78.7 to 78.5, which is actually a big deal as far as, utilization of facilities. So all of this supports maybe the Fed is not going to have to be, higher for longer or have to wait as long to start cutting rates. 10-year treasury yields falling about 4 basis points today. So again, good news for our markets, really for the broadening out of the markets. As you can see here, the 50-day moving percent of stocks above their 50-day moving average is now at 56%. That is a huge jump today. That's a jump of about 5%. 5% of stocks are now breaking above your 50-day moving average today. That's overall up about 9.5%. Now, I know it took a while to get to this, but let's go over your breaking news for AMC stock today. Roth Capital analyst Eric Handler now anticipates the company will earn $2.35 per share for the year. Now, this is not a positive number. This is a negative number, okay? So actually loss of $2.35 per share, down from their previous estimate of $2.34 per share. The consensus estimate for AMC Entertainment's current full year earnings is $2.13 per share. Roth Capital also issued estimates for AMC Entertainment's Q4 2023 earnings at a loss of 90 cents, Q2 2024 at a loss of 39 cents, Q3 earnings at a loss of 9 cents, and Q4 2024 earnings at a loss of 59 cents. Full year 2024 earnings at $1.90 of EPS, and full year 2025 earnings at a loss of 58 cents. So pretty interesting as well there. And the last move you've seen from analysts was B. Riley's. They cut their target price on shares of AMC Entertainment from $15 to $12 and set a neutral rating for the company in a research report on Tuesday. So, yeah, not great news that you're seeing there. That's for sure. Option activity here on the day today. Really don't have anything so far that's popping up, but volume today is 68.33% to the call side and 31.67% to the put side. Shorting activity. You can see we don't have any cost to borrow numbers, which is actually pretty interesting. And this thing just keeps popping up. Oh my gosh. So relentless. Every 2 minutes. No cost to borrow updated numbers here, but we do have 12.11% short interest of free float, $145.63 million worth of short positions, days to cover 1.76, 30.34 million shares that are currently sold short, shares out on loan 31.94 million, cost to borrow 1.03%, utilization of 48.44%, and a short score of 64 out of 100. If you look at the Stock Tracker data, lots of option activity as well, expiring this Friday. 26,000 calls in the money, about 80,000 calls out the money, 10,000 puts in the money, and about 30,000 puts that are out of the money. So decent amount of option activity. If you do see a big move coming even tomorrow, we will have some data coming out that will be, potentially more fuel on the AMC fire, whether, for good or for bad. So definitely want to be watching that. Now, AMC over here on Stock Twits, you can see the sentiment is at 51, which is neutral. Message volume is high at 59, and the participation ratio at 54, which is categorized as neutral. So that's the gist of really what is going on here on the day today. We can look at the Fed rate monitor tool and take a little gander at what the markets are now pricing in following today's retail sales number, December 18th. So we're pricing in 1, 2, 3, 4 rate cuts still for 2024. The odds of that actually going up about 1% today. The odds of 6 rate cuts or 5 rate cuts going from 23.9% yesterday to 26.7% today. So almost a 3% boost there. The odds for March 20th, 88% chance of a pause, 12% chance of a rate cut. May 1st, 60.1% chance of a continued pause. June, you're pricing in your first rate cut, 52.9% chance, 18% chance that we will stay paused through June, and 26.4% chance that we will get 2 rate cuts by June. There's actually a 2.7% chance we'll get 3 rate cuts by June. But I mean, today, really, let's be honest, was the first sign that the economy maybe is not as strong as some people expect. Now, 1 month on retail sales, it's not going to cause people to panic. But eventually, if we start to get more and more bad data or data leaning towards a slowdown, one, we're going to get cuts sooner from the Fed, but it might turn into the Fed is cutting for the wrong reason, right? If that, happens, that is not good. Stocks tend to sell off over 20% upon the first Fed rate cut. So we'll see. It's looking a little bit questionable at this point how strong the economy actually is. Hit the like button as well as subscribe to the channel. Let me know what you think about this information down below in the comment section. In the next video, we'll go a little bit deeper on SMCI, NVIDIA, your AI names, and what I expect to happen next. We do have some big economic data tomorrow, and I'll give you the full rundown of AMC stock in correlation to a potential sell-off in AI names. What do I think is going to happen next? Hit the like button as well as subscribe to the channel. You guys have a great rest of your day, and I will see you in the next one.